Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to get the lowdown on a couple of stocks on the move with Mike Vodicka, our momentum stock strategist at Zacks.com. Got a couple of interesting picks for us this week. Royal Gold is one of them, RGLD, the ticker symbol. So the gold stocks are still doing well, huh?
Yes, they are. Royal Gold is a play on what we're seeing happening in the gold market and what's been happening for about the last 10 years or so. I actually put together some numbers last week and took a look at it because I was curious what gold had been doing. And what we have seen over the last 10 years is gold rising from about $250 to a recent high of 19. So that's roughly a 700% gain over the last 10 years, which is huge. This is one of the strongest momentum trends in the market, the gold trade right now. Also, moving into the gold stocks, what's been interesting though is that there's been winners and losers in the gold stocks. Some gold stocks have done really well and some gold stocks have underperformed, so that's been sort of somewhat of an anomaly. Royal Gold, of course, the reason we're talking about it today is because it's done really well. Getting into some more details about Royal Gold, it's a $4.5 billion company, so it's a mid-capper. And the company had seen some really sharp gains in its share price this year. Opened the year trading about 45 to 50, and we recently saw a 52-week high of $83. And that sharp upward move, it comes off of some pretty solid fundamentals from Royal Gold. When they reported second quarter earnings, their sales are up 46% year over year. Their earnings came in at 39 cents. That was a really nice increase from last year when they came in at 21 cents, so that was great. And the key drivers of the quarter were really two simple things, which is number one, increased production. They were able to boost their production sharply year over year. And then secondly, with rising gold prices, you have a formula for higher earnings. They captured pretty strong gold prices during the quarter, so that helped them boost their earnings.
All right. And do we have a chart on this one or no?
Yes, we do actually, yes.
Okay.
Thank you for asking.
All right. Threw me there for a minute.
Like I said, kind of mentioned before, is Royal Gold has been one of the big winners in the gold stocks. We've seen shares jump from about 45 to 50 early in the year, and we recently saw a 52-week high at $83, so that's been great. One thing to remember about Royal Gold, though, is it does look a little bit pricey, trading with a PEG ratio of 6.2, and that's well above the benchmark for value of 1, so it does look pricey here, but clearly the stock has a lot of momentum.
All right. Carbo Ceramics, CRR, the ticker symbol, is another one that you want to talk about that you've written about recently. I'm going to guess that this is not a company that makes ceramic figurines, right?
No, they don't. Carbo is actually an energy services company, and it's been kind of an interesting year for the energy stocks. There's been a lot of economic uncertainty, and when that kind of rears its head into the growth projections, when the investment banks and the economists start downgrading their GDP projections, you'll see the energy stocks take a hit, and that's exactly what we've seen happen overall in energy stocks. Carbo has been a standout in the group, though. They've actually had a great year. Just in the last year, shares jumped from $77 to a recent high of $183. So we've seen some pretty sharp gains in the share price over the last year. Moving into some of the fundamentals on Carbo is the gains in the share price have been supported by really strong fundamentals. Their second quarter results, sales were up 34% year over year. They posted another earnings surprise. They've beat in each of the last 4 quarters, which is great. And this company is actually suffering from a problem that most companies wish they had, is they're actually having a hard time meeting demand. Demand is so strong for their product right now. So what they're doing is they're sharply ramping up production. They're actually announced in their second quarter results that they're going to add an additional 250 million pounds of ceramic propant production by, I think it was the beginning of the fourth quarter, which is ahead of schedule.
Wow.
So that's going to push their total production up to $2.1 billion. So that's a pretty sharp increase for them. But that's the story with Carbo, is that, they're literally having a hard time keeping up with the demand. So kind of pushing the story forward a little bit, shares actually, even though they've seen a lot of gains, they actually do look pretty fairly valued here. PEG ratio of 0.79, which is below the benchmark of 1 for value. And then shifting gears into the share price is, we did see a little bit of a pullback when the market was weak in July and August with Carbo, but it's since recovered, and this is definitely a hot momentum stock out of energy.
All right. Do you own either of these two?
No, I don't.
Okay. Had to think about it there for a minute, didn't you? You can check out some other stock picks on our homepage, Zacks.com, if you're not watching this video from our website. 4 new picks go up there for you daily, one in each of the investing categories that we write about on Zacks.com. And with Mike, I'm Terry Ruffalo.